Good morning. Welcome to Wednesday's early morning call. It's Wednesday, the 3rd of May. Let's take a look at the headlines as you wait today's big event of the day ahead, and that is the interest rate move expected from the US Federal Reserve. We've got gold on the way up, oil on the way down, all coming up in the next couple of minutes. Meanwhile, the tech sector is in amongst the leading laggards in a market which was hit heavily yesterday. We are seeing a small fight back in this morning's session across the European markets. We saw some disappointing guidance late last night from AMD, which saw its stock on the way down. And we are focused in on the banking sector here in Europe. We have Lloyds Banking Group out with earnings and also BNP Paribas. Take a look at volatility. We're down today. Spike up yesterday, and in fact, the spike yesterday taking us back there to levels not seen since the beginning of April. And then came the pullback in the markets. And in fact, this is one reason why I think we're expecting a slightly stronger start to the trading day today, despite the fact that yesterday's trade was a massive loss on the downside. In fact, the worst performance on the downside since the 17th of March. We've got this fight back at the moment in the market, 78.08. We saw a close at 77.90 odd yesterday on the FTSE 100. So we have around about 20 points on the upside expected at the start in the London markets today. A lot of companies coming through with earnings today. And I think that's really going to be the focus to see just exactly how we get a response to some of those companies, which we'll cover in just a few moments' time. German DAX, same sort of price action. We're up around about 0.25% today on the markets after that big loss that we saw yesterday. Again, like the London markets, we are in amongst some of the positive numbers across the indices today. Germany taking part in the gains that we've got. That being said, I think the market's still looking potentially for some of the attractions, even the lows back in October last year. And I think that remains the longer term focus. A retracement, certainly partially down to that level. This is the French CAC 40, same sort of thing. We're expecting a gain at the start of today's session. But this curling over the market, you can see mimicked by the momentum picking up now on the downside. Let's take a look at what's been happening overnight in the Asia Pacific markets. The market's down across the board. And in fact, you can see in amongst the biggest decliners you've got there with that Australian benchmark down 1.2%. Singapore STI, we've got a drop there today. It's Constitution Day in Japan, which means there's no cash session there. Let's take a look at this Australian market in terms of the market direction. And as I said, it's a bit like some of the other markets that we've got some pressure building, but unlike the other markets across Europe where we've got some gains expected at the start today, you can see that we were down for a second day, in fact, third day in a row on the Australian benchmark on the session in today's trade. Currently trading at 7,200 on the Australian ASX 200 index. Let's take a look at what's been happening in the US markets, remind ourselves as to what went on yesterday. And it was tech stocks broadly that were most severely hit on concerns, once again, about the banking sector. Also, there was the JOLTS job openings index out yesterday, which showed that there was another downtick. I think it was the third month in a row, downtick in jobs available for people, which indicates, I think, the markets in the context of rising interest rates. We'll get some more detail on interest rates in just a few moments' time when I'll sort through some of the other reasons as to what's happening in the markets, as to what the Fed's doing. But broadly speaking, markets now widely expecting the Fed to act again. Let's take a look at some of the charts. This is the NASDAQ yesterday down for a second day in a row, and we're holding on to where we closed out yesterday's session. The Dow yesterday was down like all the other markets. But we've got a little bit of money going in there to that market there just at the moment. So tonight, Wednesday, the 3rd of May, we have the US Federal Reserve on interest rates. It's the end of 2 days of meetings, and the markets are expecting a rise by a margin of 25 basis points to a target range of between 5 and 5.25%. Now, stubborn inflation remaining the single biggest risk to long-term economic development. Now, this remains the priority over a recession, which is the short-term pain that has to be endured, according to economists, when looking at the mechanics of what goes on behind interest rates, inflation, and growth. One has to accept the fact that we have to go through a period of pain to conquer inflation. Now, so far as the markets are concerned, For a second day in a row, we've got weakness in the US dollar. This is demonstrated here by the euro dollar trade. If you are long on this or want to go long on this, your stop goes underneath the underside of the bottom of yesterday's wick on that candle there. So your stop loss at around about the 109.40 level, 109.25 level. If your long-term trade is to go long on this, and that would indicate US dollar weakness. Now, if we do get a hawkish Fed, we could well see an unwinding of that trade to a degree, plus the fact we could well see some weakness in the S&P 500. Now, the index at the moment is at 41.26. If the Fed goes heavy on the rhetoric that it wants to continue to keep raising interest rates, then I suspect we could well see some disappointment on this market here, and we could well see a little bit of a pullback. Now, anything where we've got any concern about the outlook, as indeed we had yesterday, money could well continue to go into gold. Now, yesterday it did so spectacularly, and in fact, it stormed past the 2,000 level, this blue dotted line here, currently trading at $2,016 the ounce. This is the all-time record high at 2048 that we had here back on the 13th of April. I beg your pardon, not the all-time record high, the recent record high we've had, the all-time record high at 2075. Now, that doesn't seem now too far away, to be honest with you, where we are at the moment. Any further upside to gold is likely to see a continuation of that move towards those recent highs. Let's take a look at what else has been happening in the markets, because oil is the other area of the market where we've got concerns about the long-term outlook for potential recession. And this has seen some pressure build in the price of oil. Now, I want to show you what's going on at the moment with Brent in amongst the other markets to follow, because yesterday was a big decline on the downside. Fears about recession growing again. The Fed doesn't seem to be too concerned in the short term about the recession if it conquers inflation. And this is why we saw that big drop in the price of Brent in yesterday's trade. We've got a little bit of money going in at 75.40, but potentially more downside to go, I suspect, if we see the Fed continue with this idea that it wants to continue to move interest rates up at the expense of GDP. Now, it's not just oil that's on the way down. We've also got big moves lower for some of the base metals. Let's take a look at what's been happening with copper, not too far away from this line of support that I've got drawn on here from the lows we had back on the 16th of March at 84.42. We're currently trading 84.87. Second day in a row of declines there for the price of copper, all wound into this idea that we are on this trajectory for a recession at some point in the future, not just in the US economy, but other economies around the world. We've got the European Central Bank meeting on interest rates, of course, tomorrow. We're widely expected to see that central bank as well concern themselves about what's happening with this runaway inflation number. Now, let's move on to other areas of the market. Take a look at what's been happening with some of the other economic data points out overnight. Australian retail sales, some positive numbers out here, growing by 0.4% in March. We were looking at a 0.2% growth figure expected for the month of March. This was the third straight monthly increase in retail trade, helped by food retailing and sales in cafes and restaurants. Later on today, we get the US private payrolls number out at 1:15 p.m. UK time. ADP employment change expected at 150,000 ahead of Friday's non-farm payroll data, and the ISM services PMI expectations are there for an April reading of 51.8. Anything over 50 is expansion, so that contributes to growth if we see a positive number there at 3 o'clock this afternoon for the ISM services PMI data. Let's move on to take a look at some of the corporates out, just to quickly run through some of the stocks that could well move at the start. Here in London, we've got Lloyds Banking Group, one of the big stocks to watch today. Beat profit expectations for the first quarter, reported pre-tax profit of £2.3 billion. The estimates have been for just below the £2 billion mark of average of analyst forecasts compiled by the bank. Net income up 15% to £4.7 billion. Now, the group has maintained its financial guidance. This looks like a positive result to me. We've seen 2 days in a row of declines for the stock of Lloyds. We were open at 47.85. If you're long on this, your stock goes underneath the 200-day moving average at around about the 46 pence level, with a view to breaking this falling line of resistance that we've got just above where we are. Now you get a candle close beyond there. You're then on the way up to these highs that we had at 50.22. That's the upside resistance to watch out for. My concern about the long-term picture. I was talking earlier about some of these markets expected technically to return to these lows we had here back on the 13th of October last year. And if that was to come to pass, that would be a substantial drop on from where we are there at the moment. But I think banks could well be at the forefront of the declines if we see more concerns about a banking crisis, which has yet to develop as some had been forecasting. But I think at the periphery, we've got little pockets of concern that continue to develop, especially around some of the smaller banks. And there comes a point where some of the larger banks like JP Morgan, which stepped in to support and buy out First Republic, you can't continue to see those big banks absorb some of the blows that are given to some of these smaller regional banks that are being, as I say, nibbled away at the edge. So at the moment, at least, Lloyds coming through with good quarterly figures. And how long these good figures remain will have to be seen. But at the moment, at least, I think potentially looking for a slightly stronger start at the beginning of today's session for Lloyds. Let's move on and take a look at some of the other companies worth looking at. Haleon, this is the company that came out of the spin-out from GlaxoSmithKline last summer. At the point of all this happening, there was some concern about what was going on at GlaxoSmithKline, but in fact, it turned out to be an absolutely stunning move, and Haleon has done so well. First quarter reported revenue up 13.7%, 9.9% organic growth. Performance is strong across geographies, according to the news out this morning. Positive volume mix across regions, despite annualizing the impact of the prior year because of the costs involved in spinning the business off. Reported profit up 34%, adjusted operating profit up 9.5%. Margins, though, down 90 basis points at 23.1%. That's the only little bit of a concern I can possibly see here for this company. This is a stock which is very close to record highs. Let me just take that up there to show you where the record high was intraday for this stock since its floating last summer. April 21st, it was at 357.7. 351.9 is where we are. Could we see a new record high in the stock today? There's certainly good reasons to take this stock up. We've got a lot of positivity already built into this stock. That would be my only concern, is the possibility that these numbers aren't quite strong enough to take us onto new record highs. But nonetheless, it basically supports this stock at these current levels. Confidence is high amongst those within the company that it will continue to meet already expected and published full year guidance for 2023. In among some of the other stocks worth watching, BNP Paribas in the French market's out with numbers this morning, more than doubled the first quarter profit compared to this time last year. After the sale of its US division, the sale of Bank of the West yielded about 2.95 billion euros in capital gains for the company, lifting the bank's net income to 4.44 billion, in line with expectations. Revenue beating expectations, just over 12 billion euros, at 1.4%. The FIC trading, this is fixed income commodity trading, over the period was up 9%. Liquidity ratio up by 10 basis points as well, percentage points over the same period last year, I should say, to 139%, while the group's cost of risk stood lower than expected at 642 million euros. This is really good in terms of the overall number. Yesterday, we saw BNP Paribas down because of concerns about the US banking sector. I can't really see too much negative built into these numbers this morning from BNP Paribas. We're opening at 57.15. If you're long on the stock goes underneath the next biggest lowest number, where we've got 5,600, so stop at around about the 55.90 level if you're long on BNP Paribas going into the start of today's session. In Germany, look out for Deutsche Lufthansa to open possibly strongly at the beginning of today's session. The German airline group expecting strong demand from holiday travel this summer and see significant year-on-year improvement in adjusted EBITDA for the full year. Lufthansa posting an adjusted quarterly EBITDA loss of 273 million after a 577 million loss this time last year. The analyst consensus was something slightly worse than that. So despite the fact it is nonetheless still a loss, revenue up 40% to just over 7 billion, falling short of consensus. But I think broadly speaking, the positivity the company is looking for the rest of this year because of a return to people to the air over last year's, still affected by COVID, of course. If we do open strongly at 962.2, stock goes underneath the 100-period moving average with a view to taking that stock up at the start of today's session. Staying on the charts, just wanted to quickly take a look at one other airline. This is Ryanair in the Euronext Dublin exchange. It will open at 15.09. Traffic up 13% in the last month, in the month of April, to 16 million people. Load factor 94 percentage points, up 3 percentage points, which goes to continue to suggest that Ryanair continues to benefit from being the largest discount airline across Europe, and it continues to dominate the skies as we see Ryanair open at 15.09. In the car making sector, Stellantis is one to watch. Revenue growing 14% to 47.2 billion euros. This is an absolutely giant car maker now. It has interests across the board in terms of saloon vehicles, SUVs. It's got electric vehicles. It's got trucks. It's got all sorts of different diversifications across this particular sector. Consolidated shipments up 7% in the quarter to around 1.48 million units. The expectations have been beaten for Stellantis, and if you see a rise at the start of today's trade from 1471 is where we are. Your stop goes underneath the 200-day moving average at around about the 1440 level if you're long on Stellantis at the start. Ford Motor fell in extended trading though late last night, which didn't help some of these auto stocks. It was cautious in its outlook. Ford confirmed its full-year guidance, but cautioned that higher industry-wide customer incentives as vehicle supply and demand rebalances will be a headwind for profitability. The group posting better than expected earnings for the first quarter. Adjusted diluted earnings per share 62 cents compared with a 38-cent figure this time last year. Analysts had looked for 40 cents a share. Revenue also beat expectations. I want to show you the chart for Ford Motor. This was the extended trade. We saw a drop late last night, ending at 1162. But because of the strong demand for trucks and SUVs, the company was able to beat expectations. Despite all this, the numbers were on the way down. Electric vehicle division continuing to post losses. This was a big disappointment when we saw those numbers produced late last night. Ford cut the price of its Mustang Mach-E twice this year, trying to boost sales volumes. Of course, it's trying to keep pace as well with what Tesla is doing, which is cutting prices. The CEO told the market that he does not intend to pursue EV sales volume at any cost, which seems to be the strategy of rival Tesla. In the chip-making sector, Advanced Micro Devices fell 6.2% last month after its sales guidance missed market expectations. Earnings of 60 cents a share on revenues of 5.4 billion, both beating estimates. But when all was said and done, this stock was down 5.8% because AMD missed the analyst estimates for PC and data center chip sales for the first quarter. Chief Executive Lisa Su told investors that the first quarter was the bottom of the market for the company's PC business and the industry, and remained confident in the group's ability to grow in the second half of the year. This was the drop that we saw late all sessions on the IG platform at 84.05. US earnings today. Quick roundup of some of those to come. Qualcomm, Kraft Heinz, and Estee Lauder. That's it from me. We will be back at 10:30 with Charting the Markets. Do watch out for Lloyds TSB at the start of the day's trade. Here in the London markets, if you're looking at banking stocks, compare and contrast with BNP Paribas, which had a sterling set of results out this morning. Also watching out for Stellantis and Deutsche Lufthansa at the start of today's trade. Still looking for a slightly stronger start across the European markets when things get underway at the top of the hour.